The reason why US malls are disappearing. Shopping malls in the US were already in decline before the COVID-19 pandemic, as consumers shifted away from traditional brick-and-mortar stores to e-commerce. The outbreak has only exacerbated the challenges at malls, as social distancing has placed restrictions on stores, movie theaters and restaurants. Shopping malls across the US have been reeling as restaurants and retail tenants struggle to keep their doors open. Data compiled by Coresight Research shows about a quarter of US malls could close over the next 3 to 5 years, accelerating a trend that began before the pandemic. Simon Property Group, the nation's biggest mall owner, said earlier this month that its fourth quarter revenue dropped by 24% on a year-over-year basis to $1.1 billion. However, some analysts think Simon, with its portfolio of A-rated malls and a healthy balance sheet, will benefit as distressed malls operated by its rivals close their doors. A third of America's malls are going to shut permanently by 2021, according to one former department store executive, as their demise is accelerated due to the coronavirus pandemic. Initially, he was expecting roughly 33% of America's malls to go dark by 2030. Now, Niffen thinks that this will happen by next year. There are still about 1,000 malls operating in the US today. So what will become of malls in America after the pandemic ends? Be with us to the end to find more on it. The American shopping mall had historically been a symbol of suburban consumerism and a one-stop shop for those living within its radius to gather, eat and shop. Consumerism, suburban growth and economic prosperity in post-World War II America led to the budding years of malls. However, in many ways, the seeds of the shopping mall's downfall were also planted in its early beginnings. In 1954, Congress, hoping to stimulate investment in manufacturing, allowed for an accelerated depreciation process for new construction projects. That's effectively tax-free money. Money poured into real estate investments. Investors chose not to improve existing malls, but instead began bloating the American landscape with new, huge malls. The bumper crop of shopping malls requires stores to fill them, which in turn drove venture capital investment for huge stores and mega retailers. The first major bust that shook the American mall and retail market happened during the 2008 global financial crisis. In 2007 to 2009 alone, 400 of America's 2,000 largest malls were shuttered, and sales per square feet in shopping malls across the nation took a nosedive. In 2018, the decline of retail, which is oft referred to as America's retail apocalypse, continued. In the first 3 quarters of 2017 alone, Change reported that 6,800 stores closed, with only 3,000 new stores replacing them. Record levels of store closures came in spite of high domestic consumer confidence, historically low unemployment, and positive growth forecasts for the US economy. If the US government launches a Make America Great Again infrastructure campaign in 2017, you can safely assume that shopping malls won't be high on the list of shovel-ready construction priorities. Developers built hundreds of malls per decade from the 1960s through the 2000s, and since 2010, only 9 new ones have been built. In fact, the country now has too many malls and shopping centers, and sales there are flatlining as more shoppers go digital. The ongoing decline of department stores is perhaps the biggest challenge that mall owners are coping with today. Most US malls feature department stores as their anchor tenants, relying on them to draw traffic that will then patronize the mall's other stores and businesses. But e-commerce and other trends have sapped the department store sales. The 5 biggest chains have closed some 750 stores, or 20% of their fleet, since 2013, and landlords are now scrambling to figure out ways to keep business flowing as they wane. Hence the growing proportion of non-restaurant/non-retail tenants in their malls. A large majority of those malls are classified as so-called B, C and D rated malls, meaning they bring in fewer sales per square foot than an A mall. An A++ mall could bring in as much as $1,000 in sales per square foot. For example, while a C+ mall does about $320. A record 25,000 store closures are expected to be announced by retailers this year, and about 55% to 60% of these closures will be in America's malls. The mall has been losing ground for a long time. Now it's losing ground faster. The cross-county shopping center was in Yonkers, in the suburbs of New York City, built in 1954 as one of the first open-air shopping malls and renovated in 2011. The center captured many of the challenges facing American suburban shopping centers in the 21st century. It was large, a super regional with a total size of over 1 million square feet. The cross-county had a successful history, but its future, along with that of other US malls, was far from certain. Nonetheless, not all was lost. The face of retail and the future of the shopping mall were pushed to change. Retailers attempted to rethink how best to reach their consumers, and some malls continued to serve their original purpose. Many dying malls were converted to serve other commercial uses, such as office space, educational centers, churches, and even sports venues. Per Green Street analysis, there are roughly 380 C- and D- rated malls out of the 1,000, and those are considered the most at risk at going dark permanently, as they don't generate enough sales to maintain the property and have greater vacancy rates. Green Street has said C malls are not viable retail centers long term. According to Niffen, Macy's is here to stay, now that it's secured $4.5 billion in new financing to weather the COVID-19 crisis. They are well secured through 2022, at least. They're going to be with us. But the future for many other retailers is much less certain. Department store operator JCPenney is still trying to emerge from bankruptcy as a smaller business. Stage Stores could be forced to liquidate if it does not find a buyer. Signet, the owner of jewelry brands including Kay, Zales and Jared, said Tuesday that it will close as many as 400 locations as its sales plummeted due to the pandemic. Even Macy's said it could accelerate its store closure plans, but it's still working through that with its landlords. What do you think about the closure of malls in the US? Are you one of them who already moved to e-commerce shopping? Let us know in the comment sections and press the like button if you enjoyed this video. Also, don't forget to subscribe to our channel and turn on the notifications so you never miss an update. See you next time. Goodbye.